A top Federal Reserve official said this week the banking system is basically still broken. Thomas Honig, Kansas City Fed president, said, quote, "The soundness of the largest financial institutions and the systemic risks they continue to pose, well, it is even worse than before the crisis." Is he right or wrong? Michael Iannaccone of MDI Investments and Rebel Cole of DePaul University are here to debate it. Welcome back to both of you.
Thank you.
Rebel, let's start with you. What do you think of his statements?
I don't think things have gotten that much worse, but certainly Dodd-Frank did nothing to deal with the crisis. As Honig points out, the five biggest banks went from $2 trillion in assets 10 years ago to $10 trillion today. In that respect, too big to fail is alive and well, and the banks are just getting bigger. Yeah,
Michael, do you agree?
I think things have gotten worse because if you look to 10 or 15 years ago, the top 5 or 10 institutions represent more than a majority of the market. 10 or 15 years ago, they represented a significant part of the market. I don't think, I've said it before, I'm going to say it again, nothing's changed at Fannie and Freddie. They've gotten bigger, they're using less equity. Dodd-Frank seems to be fixing the things that the legislature or the government can fix, which are the small banks, and they're not doing anything about the systemic risk at the bigger banks.
Well, Honig is calling for the breakup of the very large banks. Rebel, do you think realistically, is that really going to happen?
Realistically, is it going to happen? I doubt it. The Glass-Steagall, we were supposed to reimpose Glass-Steagall. That would go a long way, because if you split off the investment banks from the commercial banks, that would cut the size of the big banks like B of A and JP Morgan Chase in half. We didn't seem to have the political will to do that in the Dodd-Frank bill. And as he also points out, the ultimate closure authority we're supposed to end too big to fail ends up in the hands of the Treasury Secretary. Do we really think Tim Geithner is going to close down a Wall Street bank?
Well, it's interesting that Honig is actually, kind of telling it like it is versus Treasury Secretary Tim Geithner and then the Fed chief Ben Bernanke. I mean, doesn't this question their credibility, Michael?
It does question their credibility, but another area of the banking is the federal home loan banks. A lot of them are insolvent, but we're keeping them open, and the reason that you keep them open, you can think of them as mini AIGs, that it's a way for the government to funnel money to all the banks because they're the ones who lend to the banks, but they're not fixing the problem.
Okay, I want to get to this actually. It's the Wall Street Journal reporting this week that the Obama administration is trying to get a $20 billion settlement from the large banks regarding their practices on bad mortgages.
It's a farce.
Is it enough?
$20 billion sounds like a really big number, and it makes for a good headline. We got $20 billion out of the big banks. But you got to remember, there's 4 million homes that are in serious financial distress. That comes to about $5,000 a piece. They're talking about using that for principal reduction. $5,000 is about 2% of the outstanding balance. That's going to mean nothing. Plus, they're talking about giving this money to the people that are currently delinquent, not the ones that have already been forced out of their houses by the bad practices of the servicers.
Or the people that could become delinquent, and they're stretching and they're cutting their costs and they're doing things that they should be doing in order to keep on making their mortgage payment.
Last week, the comptroller of currency said only a, quote, small number of borrowers were wrongfully foreclosed on. And this is a government agency investigating this problem.
You got to look under a rock to find the cockroaches, and they didn't look in the right places. They looked under the street light where the lighting was good. If you don't want to find bad things, then just don't look where you know they are.
Do you agree with that? Do you think they weren't looking hard enough?
I don't think everything's well known yet. I think, the foreclosures, you could say a foreclosure was wrong to happen because of robo-signing, but you could also say the person shouldn't have been given the loan in the first place. Or, there's many steps along the path where mistakes can be made that the ultimate owner of the security doesn't have the right to own that security. And they're saying, oh, well, just based upon robo-signing, these people were wrong. But there's plenty of mistakes that were made, and they don't have all that information yet.
If you Google foreclosure fraud, you're going to find dozens, if not hundreds of cases of wrongful foreclosures. The fact is, this is a state real property matter. It's still going to have to be resolved in the 50 state Supreme Courts. Massachusetts has already come out against the big banks. There was a recent federal bankruptcy court that also found that MERS was operating illegally. Ultimately, it's a real property issue, and until the courts sort it out, we're still going to be looking at this foreclosure problem for years to come.
Okay, we'll leave it there. Thank you very much. Rebel Cole of DePaul University and Michael Iannaccone of MDI Investments.
Thanks.
Thank you.